Well, I would say it's been a reality of emerging markets that security issues occur in countries. Especially for that reason, FMO puts great emphasis on diversifying our portfolio. So we like to be well diversified so that you can actually withstand certain market setbacks. Talking about Ukraine, we do have Ukraine portfolio and we watch it closely, and we are very close to our investee companies, fund managers, borrowers. And typically what happens is that you may see a delay in exits, but if the underlying businesses are good businesses, they will be there if this whole thing sort of ends. So I'm not too negative about it. I do realize it changes people's sentiment, but for us as a development bank, we would like to be there in good times and bad times, and mostly it just takes a bit more time.
Well, it's interesting that you mention opportunities and investor appetite in the same breath. And at one level you're right to, but at the other level the opportunity is almost the opposite of investor appetite. So we've seen obvious security concerns, in many places, most notably in Russia and the Federation. And that's clearly putting investors off, it's changing investor appetite, it's raising their perceived risk. Now, are there still opportunities on the ground in Russia? Absolutely. The Russian private equity specialists that I speak to, say that, not only is it business as usual, but in fact, they have more opportunities to buy attractive assets at attractive prices. Can they attract investor funding from the West for that at the moment? It's very difficult. But does that mean there are big opportunities for those who know the region and are brave enough to invest at the moment? Absolutely. And we had a great session this morning from the gentleman from Alpinvest describing the macro view on valuations of emerging market assets, and in his view, backed up with a lot of data, they're pretty reasonable right now. So yes, there are security concerns, yes, that's affecting appetite, and maybe it's actually increasing the opportunities, not the opposite.
We're looking at Latin America, and we identified 4 countries that we think are stable in terms of political situation, which is Brazil, Colombia, Peru, and Chile. And that's the countries that we focus on, and we believe have good opportunities in terms of political stability, security issues. So we try to avoid the maybe Argentina regions, or of course Venezuela type of political situations.
I think security issues have always been a concern in our markets, and I don't think you can get away from that. Nonetheless, I think in terms of what you're seeing in overriding themes like the rise in the consumer, people still need to buy food to feed their children. They still need to educate their children and themselves. They still need to go to work every day. These companies don't fold overnight, and a lot can take advantage of some of the opportunities that are thrown up where there is confusion. That's the whole idea of an inefficient marketplace. So rather than run away from areas where sometimes there's chaos in the streets, if I can put it that way, they are an opportunity for many people, and that's why you see hedge funds, for example, come in and out of crisis-hit countries. Also, it's a question of valuation. So if you look at a place like Ukraine, for example, entry valuations are really down at the moment. It's a brilliant time for investing in a country like that. Not easy, and you need to know what you're looking at, but for a disciplined investor that is really conscious of entry prices, wonderful time to invest.